Dr. Bhatt.
Thank you, Anisha. You've been a journalist. So you're not somebody who's just an anchor. You are domain. Understand what is happening in marketing, how to create online experiences, and so on and so forth. So it's first of all, I want to start by saying that we at Exchange for Media have a great team, and there are practitioners. I look around what's happening around us, so I have a bird's eye view, and even in our businesses, we want to integrate technology more and more as we go along. As every business needs to be tech, it has to be tech. If you're in education, it has to be, without calling it a medicine, is health tech. So every business is tech. But Exchange for Media's core is the CMOs, the marketers. I've been saying that the role of the CMO, the CIO, the CTO, and the CDO, the Chief Digital Officer, is kind of coming into one. So while we have excellent speakers, I'll keep to my time of 5 minutes, and let me give you my 7 trends of Martech in India. Also, as more and more money will go in performance marketing, marketing through digital will get a higher share because marketers are focused on making sure that the money they spend also produces revenue and also enhances the relationship. The first trend is that if you talk to any marketer, anybody who's selling products, good services, they will talk to you about omni-channel. The experience is omni-channel. So getting the omni-channel experience right will happen through Martech. Right now it's a buzzword, we talk about it. So omni-channel is the biggest trend that marketers need to get right as we move to a contactless economy. And it's been forced on us, but it may lead to a change consumer behavior. So one is getting the omni-channel experience right. Then second is data unification. Now you may have multiple, so omni-channel and data unification go hand in hand. The rapid proliferation of data will lead to need for data unification and consolidation. So all the tools you have is the CRM tools. So you need one single tool to unify data. Third is 100% mobile device experience making makes e-commerce thing of the past. So everything will happen through a mobile device. Now digital natives like Tokopedia, Lazada are excelling in the space by developing in-app games. So gamification. So how do you enhance the mobile experience using Martech? Fourth is video consumption. We are doing this over Zoom. There are other video platforms. So how do you enhance this video experience? So the tech surrounding it will also develop. Fifth is the rise in voice search. We'll see VSO overtake SEO. So voice searches will possibly grow more than SEO. And we've been talking of artificial intelligence for 65 years. Not much. 65 years. That's when artificial intelligence as a term was coined. And currently artificial and machine learning has become important in every business. But I think you will see the growth of artificial intelligence and machine learning and its integration in how a marketer takes his or her decisions. Last but not least, for the last 5 years, we've been talking of AR, VR. Finally, marketers will make more investments in AR, VR. As the virtual digital experience needs to be enhanced, the AR, VR will become really, experience enhancers. So these are my opening comments. I look forward to learning from other speakers, other stalwarts, practitioners, leaders, tech evangelists, and I'm sure our ecosystem of marketers on exchangeformedia.com, impactonnet.com, pitchonnet.com, and other associated sites will also learn. Back to you, Anisha and Ruel.
Thank you, sir. Thank you for this wonderful address. Up next, we have Dr. Apoorva Durga, who's the analyst and founder AltView Advisory. Welcome, Mr. Durga, to this amazing lineup of speakers that we have today at the right Martech stack that will go on the series every day for the next 4 days that will be continuing. And Mr. Durga will be speaking about, I'm just, okay. You can go on, please, sorry. Okay. Just started.
Okay, thank you, Rohit. I'm just sharing my screen. So is my screen visible?
Yes. It's
okay, so thank you for having me here. Hello, everyone. My name is Apoorva Durga, and I am founder of AltView Advisory, a research and advisory firm based in Delhi. As an analyst and consultant, I cover several marketing technology marketplaces. So thank you to everyone for joining this session today. There are a lot of great sessions lined up in this event, and I am looking forward to learning from the practitioners and gurus. For this session though, I hope to give you an overview of emerging technologies, or in other words, what should a tech marketer's toolbox consist of as we move into 2020s. Oh, by the way, if you are on Twitter and you want to feel like tweeting, please use the Martech India hashtag. That will be helpful for other people who are following this on Twitter. So a brief introduction of what AltView does. It is essentially a vendor agnostic firm that helps customers sort out their Martech choices. This includes helping you build your own stack, picking up the right tools, benchmarking your readiness with competition, and so on. I also run a Martech masterclass that covers a variety of aspects, ranging from basics of Martech to building a Martech business case to product selection and so on and so forth. So with that out of the way, let us just jump in. This is what we will broadly cover. Martech is essentially marketing plus technology, right? So we will talk a bit about the challenges that today's marketers face. We will then look at the state of marketing technology and technologies that can help sort out some of those challenges or mitigate some of those challenges. And then we will have a look at the landscape maps that are becoming popular and plans for our own India-specific Martech map. So that's really what we will look at. So let's look at the challenges that marketers face, and Dr. Batra touched upon this about the fact that omnichannel is important. It is a major issue that marketers face. But we know that omnichannel experience is completely broken, especially in India. No matter where, when, or why the interaction is happening, I as a customer should always feel as if I'm talking to the same brand. Consistency is very important, but that rarely happens. Even in 2020, many brands deliver an experience that is completely fragmented and disjointed and different across different touchpoints. There are several examples. The other day, I booked a demand draft on a bank's website to be picked up from my nearest branch. But when I reached the branch, they had absolutely no clue. They didn't know why I was there. And then there are other examples. If the interaction is happening, I as a customer should always feel as if I'm talking to the same brand. For a specific handset, but when I actually went to the website, this is what I see, right? So completely different prices. Now you could argue that this happened because by the time I clicked on the offer, that offer was gone, right? But that's not the case. So here's another example. This one from their competitor. Now, first, I don't know why they sent me this email because I have never looked at these kind of products. But to buttress my point, you will see that on the email, here's the product details. It is exactly the same product that is there on the website, but now with a different MRP, right? Now you could argue that the offer price has changed, but MRP changing, that really just doesn't make sense, right? And the only plausible reason for that to happen would be if the underlying data sources for different channels are not in sync with each other. And we see this very, very often, right? Here's another example. LinkedIn sends me this email with a $50 coupon code for their LinkedIn marketing, LinkedIn campaigns. So I go to the website and apply this coupon, and the message that I get is that this coupon is already gone. Now, if that coupon is already gone, or if the coupon is already used, why send me an email in the first place, right? You often get SMSs presenting you to pay bills when you already paid them, right? I'm sure almost everybody gets them. And then they have a disclaimer saying, please ignore if paid. But why do you have to have a disclaimer if your underlying systems are consistent across all the channels? So we see a number of such examples across different verticals, different retailers, different type of service providers. Here's another example. Why this happens, right? So here I'm trying to explain why that kind of thing happens. So this is an e-grocery retailer, and on their website, I use one identity. And on their Facebook page, I use another identity. And the two identities are completely different. They have separate email IDs. And it is not really a trivial exercise to map these two separate identities to one common user, which is me in this case. And here there are only two channels, right? For big brands, there could be 40 channels, 50 channels, multiple websites, email, mobile, social, all of those. And if customers have so many identities, it is going to be a very challenging exercise to map them to one single identity. And then there are more challenges and goals that today's marketers are struggling to achieve. Now there are several things. So some of these challenges we have covered, but there are others like content recommendation, personalized user experience, predictive analytics. How do you provide next best kind of actions, recommend some things to people, do analytics, create a single unified view of users. So several of these things are what today's marketers are facing. Can technology address them? Is there enough technology to address them? Well, it turns out there is, and lots of it. Right? So this is a famous Martech 5000 technology landscape by Scott Brinker. Scott is doing a keynote later. But for now, I will give a quick background of this. This is a humongous graphic, and it has logos of 8,000 Martech vendors. You see these different colored continents? These are the categories of these vendors. And Scott helpfully lists these categories on the left. There are 6 categories that he mentions. These are all different types of software. And over time, this graphic has grown at a crazy rate, as you can see on the part here, right? From about 1,000 solutions in 2014 to 8,000 now. Huge, right? That's a huge growth. Now, here's the thing. It still does not contain all the vendors. And there are several more, including several regional as well as vertically specialized vendors. So vendors who target specific verticals like finance or retail, or vendors that are popular in specific geographies like India. Not a lot of them find space here. Right? So essentially, even though this contains 8,000 vendors, there are several more, and this marketplace is full of thousands of products, vendors, and projects that claim to do what you need. Essentially, everyone calls them a Martech vendor, even if all they have is a rich text editor or a simple page builder. So essentially, there's a lot in this marketplace, and it is important to structure this marketplace for your own understanding. So let's make an attempt to structure the marketplace a bit in next few slides. Here are some of the ways that I have used to categorize different vendors. The most common way to categorize these vendors is based on the functionality they provide. So we will talk about that a bit later in the slides. You can also categorize these vendors based on tiers. So a vendor could be a suite vendor like Oracle, IBM, etc. They could be best of breed vendors. And this question keeps coming up very often. We will talk about this also later in some detail. Then you can categorize vendors based on their support for specific industry verticals or domains. So there are solutions that target specific verticals. So there is Bangalore-based company called Manthan that targets only retail, right? So there are several of those, and there's one example here, the screenshot that shows you CDPs by their industry focus. So that's another way. Then you can also categorize these vendors based on their support for specific use cases. Not all vendors cover all the use cases, so that's an important criteria. And finally, you can categorize these vendors by the deployment approaches. So whether they allow in-house, do they allow on-premise deployment, do they allow SaaS-based deployment, and so on and so forth. Essentially, by doing these kind of categorization, you can actually bring down those 8,000 or 80,000 or whatever number of vendors there are to a much more manageable vendors that are relevant to you. So we will not go through all these categorization, but let's look at the first two in slightly more detail. So based on these functional categories, here are some of the key categories. There's containment experience. So essentially, this category includes products and tools that help you manage content for your website. So web content management system or digital asset management and media asset management systems that help you create digital and audio and video content for your digital media campaigns, ad campaigns, etc. Then you have social and relationships. So these are the tools that help you manage your social media presence. So social media marketing would be an example. Monitoring social media for, let's say, doing a sentiment analysis of tweets about your product or about your brand. Then you have the products in the e-commerce category. So products that let you do sales automation or products that let you build your own e-commerce website, product information management, catalog management, and so on. And then there are products for advertising and promotion. So products that let you do advertising campaigns on social media, on mobile, on print, doing PR type of activities and those kind of functionality. And then you have the marketing category. So this really contains technologies that lets you do marketing campaigns, email campaigns, marketing automation, CRM, and so on and so forth. Now these are some of the categories that we have traditionally seen, and they are not really new ones. Several of them have existed for a long time. The problem with this kind of a categorization model is that there is always going to be an overlap, and overlap that results in a siloed model, right? So you might have a social media marketing product that works on the same user base that, let's say, a marketing automation tool needs to work on. And hence you need to be able to tie these 5 categories together to make up for a better omni-channel experience. And that's where these 2 new categories come in. These are data and planning. So these are categories that have really emerged as very popular in past couple of years and growing at a very, very fast pace. In particular, data category is one where we are seeing a lot of interest in marketers, and it consists of several categories, but we will look at some of the key subcategories within data. These are data platforms, so platforms that allow you to build a unified profile of your users. So if your users come to you through different 10 or 15 channels, you are able to map them to a single user. So that's what CDPs do, and CDPs do this with help of platforms like data management platform DMPs, enrich their data, and essentially you get a single user profile. There are other functionality also that data platforms do, but this is really the key functionality. Now, once you have a unified profile, you want to be able to manage your users' journey across all these channels. So you need platforms for managing their journeys, for doing personalization, sort of an ATC for your customers, air traffic control for your customers. So manage their journey. So you have these decisioning platforms. Then you want to be able to analyze what your customers are doing. So you have analytics platforms, so dashboards, journey analytics, and those kind of tools. And since you are collecting so much of your information from your customers, your users, you need to have tools that let you do things like consent management, data governance, privacy. And with the new data privacy rules coming up in India, I think this is going to be a big area for you, especially in India. And then for planning, you have the tools for campaign planning. So you don't want to be going to a marketing automation and creating a plan or a calendar there, and then going to a social media campaign tool and creating another calendar there. So you need tools that can work across channels. And finally, you have the management subcategory there that lets you do administration and monitoring of the health of your tools and so on and so forth. So these are not all the subcategories, but I think these are the key categories that you need to look at when you are building your stack. And Jared has a good session on building Martech stack, and I recommend that you attend that session for some very good inputs on how to go about building your omni-channel marketing stack. Okay, so we have seen there are 8,000 products in that landscape, and I said that there are many more, right? So this question keeps coming up. I have already licensed Salesforce or IBM. Do I still need to look at these 8,000 products? So replace Salesforce with IBM or Oracle or any digital experience platform or marketing cloud or suites or what have you, right? So this question keeps coming up. And there are essentially two approaches to building your Martech stack. So on the right is a screenshot of how USPS has built their marketing stack. So it shows you their key requirements on this frame, and then you see the products that they have used for each of those requirements. So this is a good visualization. The other approach would have obviously been to use just one product, say Salesforce, for all the requirements instead of using individual tools. Now the point here is that these suite vendors, some of them at least, can provide multiple solutions across different categories. Right? So it can be an easy thing to actually go with one of those suite vendors, license one of those big suite vendors or cloud providers or DXPs as a solution for all your requirements, Martech requirements. That seems like a good deal, right? Often customers believe that such a solution solves their problem. Analysts and vendors push that notion too, right? But we have seen that doesn't really happen in real life. It is not necessary that a solution that provides or a vendor that provides many different solutions using the same product is a better fit. In fact, a lot of times it actually turns out to be a bad fit, a really bad one at that. And the reason for that is that most of these suite vendors have cobbled together their suites based on several acquisitions. As a result, their offering is not really a single tool in terms of user experience and architecture, but often a very badly cobbled together package of multiple tools, multiple products with varying provenance. Right? So essentially, there is no such thing as an end-to-end solution or out-of-the-box platform. You really need to build your own Martech stack, even if you were using a suite. So in case you do license a suite, keep these two things in mind. First, consider individual products in the suite based on its own merit and not because it's part of the suite. So for example, if you were going with, let's say, Adobe CDP, right? Don't just go with Adobe CDP because you've already licensed Adobe's broader offerings, right? So compare Adobe CDP offering with other standalone CDP offerings and see if it meets your requirements or not. And second point to keep in mind is that don't assume all the components of your suite or cloud are well integrated, because they are not, right? So plan for additional effort and resources there. Right, so now back to landscapes. So how much time we've got? Okay, so let's get back to landscape, right? So we looked at Scott's landscape of 8,000 vendors. There are several more landscapes like that. So there are regional landscapes like this one from UK. We also have several others. So there is a Swedish landscape. There's a German Martech landscape. There is a Canadian there. There is a European there. I think there are a couple of more there. There's even a Chinese one, right? China has a Martech landscape map, and here's the Indian one. No, it doesn't exist, right? Right. So we want to create a India-specific Martech map. There are two reasons for that. One, obviously, that it doesn't exist. And second is essentially this, right? So why do we need an Indian one when there are so many global products? Do we need a separate one? And I think there are three aspects there. The first one is that we want to have a local innovation ecosystem. We want to encourage that, right? And having a catalog of Indian Martech companies would help that. So a local presence of a company is very important because as an end user, if I have somebody in my time zone, in my geography to help me when my site is down or my implementation is down, that's very useful. The global landscape also miss several regional vendors, so that's another reason. We also want to be able to encourage local vendors, so vendors who don't have a lot of marketing budgets to get published in large global landscapes. This will also create opportunities for talent, so people would know what are the other possibilities for career progression and so on. And finally, this will help us collaborate on local issues. So let's say talking to government bodies for some concessions or working on a Martech standard or something like that. The second key aspect here is that having such a map will help us address the needs of Indian marketers. So there are several India-specific capabilities, right? So for example, cash on delivery is a very Indian phenomena, and capturing real-time cash on delivery data when a customer is picking up her package, I think that would be very relevant in an Indian scenario, whereas it may not be relevant in other geographies. In India, we also have different activation channels that are not really popular elsewhere, right? So for example, WhatsApp is a big activation channel here. Also, Indian companies find agency model very, very helpful. So a lot of times it is the agency who is doing marketing for a brand, and hence that makes it really, really different here. And finally, we want to be able to address the needs of Indian IT industry, right? So CIOs, CTOs, and a lot of Indian IT people prefer DIY rather than packaged off-the-shelf solutions. There's also different focus here, right? So instead of marketers making decision, I think at a lot of companies, decision is still taken by data science and engineering teams, which may or may not be correct, but that's a different issue. But that has been reported here. Then there are issues of localization. So Hindi is a big market. Other vernacular languages are a big market, and they are really untapped right now because global products are not looking at them. India-specific pricing, compliance, I think those are self-explanatory. Finally, scale, right? The kind of population we have, and once we start using these tools for regional languages, I think that scale is going to be unprecedented, and we really need tools that understand the local context to be able to address that kind of scale. So here's the plan for releasing the map. We will release this India Martech map by September. These are the initial collaborators: Altview Advisory, AI Props, and Exchange for Media. But we will welcome all contributions, and we will give obviously due credits. Here's the link to the form, and I will post it also somewhere so that you can easily access it. So you can click on the form and submit your recommendations for the companies or vendors that should be included in India Martech map. Okay, so that's really it. So this is really the summary of my presentation today. There's a lot of tech out there, but you don't really need to look at everything. You need to be able to simplify it using different categorizations. Second point is that if anybody claims that they have a DXP or CXP or a Martech or some other XY stack that provides an end-to-end solution, be wary of those claims. You have to build such a solution. It does not exist. Even if you license a suite or a marketing cloud, you will need to build it. And finally, look out for the Indian Martech landscape. Better still, contribute to it.
Thank you, Dr. Durga.
Yes.
Such a lovely discussion, and you have given us the global perspectives on the Martech landscape and how India has this unique positioning in all of that mix. What do you think, Anisha? I mean, your initial thoughts on this discussion?
Well, after listening to Apoorva, it feels to me that the job of a CMO is an exacting one. You have to build your own stack. One
Absolutely.
suit is not going to work for you. Apoorva, if you're still here, there are a few questions that have come in from some of our participants. Apoorva, you there?
Sure, I'm here. I've also got some questions here that people have sent.
Yes, so let me ask you, there is a question that is coming from Shakti at Grofers. Now, Shakti is asking, how does one track the new solutions that get launched on a daily basis?
Hello.
More than that, how do I know if it's going to work for me, my brand, my company? And should you try something new just because something new, something improved has come? How much time should you give for your own system and your stacks to work?
Well, there are several questions there, right, in that one question. So first thing is, how do you keep track of this? I think there are some really good resources out there. You can go through, let's say, Scott Brinker's cheapmartech.com website. He blogs regularly about that. You can follow the Real Story Group blog. You can also follow other analyst firms that regularly track this space. So there are several resources on the web that you might want to follow in order to be able to keep up with. Of course, there is my blog as well, but I'm not going to put that here right now. Right. So there are several resources out there that track new emerging technologies, new emerging vendors. They write about those technologies in details, and you can follow them.
No, but how do you know it's going to work for you? Whether yours is outdated.
Yeah, absolutely.
Apoorva, can you just turn on your screen so that we can see you? We've seen your presentation. Now can we see you on
my screen? Should be on. I don't know why it keeps
now
going
we
off.
see you. Yes, now we see you. Thank you.
Okay. So how does it work for you? I think there is only one way to do that, and that is to actually try it out. Most of these solutions provide some sort of a demo, or a lot of solutions provide a 14-day evaluation version, a demo version. If they don't, they will be more than happy to give you a demo at your convenience. So feel free to ask those vendors for a demo, and that is really the only way to get your hand dirty and find out if it works for you or not. There's nothing else that will convince you whether it will work for you or not. The point here is that every customer has completely different requirements, and what works for me may not work for you, right? So the only way for you to find out is by actually trying it out.
Right. Dr. Durga, during your presentation, you also spoke about that India has a unique agency model that works here, unlike other markets. It's pretty prominent here in India. So I have a question from one of the agency representatives. He's asking, Mr. Venkat from Dentsu is asking, are there enough homegrown solutions as far as Martech is concerned?
I think yes, there are, and we will find out more about it when we actually release this map. But I think we know a lot of vendors, small vendors, where a lot of innovation is happening. So especially in the areas of AI and application of AI to Martech. So there are vendors, but maybe not as much as in the US. But there are certainly good amount of vendors in India who are not usually covered in the analyst reports and so on.
Right.
So in the end, it's never going to be 100% made in India stack, right? That's not going to happen, right? And I'm not even saying that. But the idea is that if there are Indian vendors and they are good, they should get visibility, and that's really the objective.
Thank you, Dr. Durga. We have a lot of questions, but we are out of time. And thank you so much for this insightful keynote. Lots to learn.
Yes.
Over to you, Anisha.
In fact, building your stack is not easy, and there are a lot of solutions there. So Apoorva has given us broad outlines on how to go about it. But let's move on. Next, we have a panel discussion on the marketing technologies India needs. Now, a country as diverse and large as India, with many states, different cultures and languages, it requires marketers to think out of the box. Now, post the corona pandemic outbreak, most people are, stocking up on essentials rather than splurging on luxurious or discretionary items. Naturally, if I am, searching on the latest study on how the virus spreads or the numbers in my city, the likelihood of me spending on a lipstick or a luxury holiday is very low. So what should marketers of discretionary products do? Should they go off the radar for some time, lie low? Does that mean when you come back and you want to build a relationship or a brand recall for your customers, that is going to be counterproductive? What marketing is going to look like in the post coronavirus world? This is what we're going to discuss in the next panel discussion. And we also will try to understand what are the marketing technologies that work more effectively in India than some of the others do. And we try to get a bit of comparison between India and some of the other markets as well. So I'm happy to introduce the panelists who will be speaking on this panel. We have Mr. Anil Srinivas Chila. He's Chief Digital and Data Officer of L'Oreal. He's a growth-oriented business leader with 20 years of experience with 11 plus years in digital transformation across multiple growth markets. We also have Mr. Prabhakar Tiwari, the CMO of Angel Broking. Now, he has been spearheading brand performance and PR initiatives for Angel Broking, and the firm has seen rapid improvements in its digital maturity metrics. So we're going to speak to him about his journey and what he foresees in the post-pandemic era. We also have Anika Agarwal, the CMO of Max Cooper, who will be with us in this panel discussion. She's a seasoned marketing professional and she joined Max Cooper in 2011. As the head of the marketing function, she is responsible for the overall brand strategy and marketing communications of the brand. I would like to welcome all three of you on this discussion.
Hello, everyone.
Thanks for joining us.
Hi, everyone.
Hi,
everyone.
Let me start with Anil. The brand L'Oreal has a wide recall. Now, at a time when people perhaps are not, focusing too much on spending on, non-essentials, what should L'Oreal do? I mean, we know you have a brand ambassador. We know you have awesome products. At this point in time, I'm just not thinking about this. So, what will you do? Will you save your pennies on your marketing? Would you then re-envisage your marketing to somehow, connect with the emotions your prospective customers feeling? Maybe it's anxiety, maybe it's stress, but you want to somehow connect with them so that your brand stays there without, trying to push them towards a purchase, which they may not be ready for now.
Yeah, I mean, the short answer to that is all of the above. But you know what? I mean, we are thought of as a makeup company, but we've got, we are the largest, hair color company, in the world and in India. We've got a great portfolio of hair color products. We've got hair care, shampoos, conditioners, serums, etc. We've obviously got skincare products, and then makeup, and then we've got the luxury part of the business, which focuses on, the premium, makeup, skincare, etc., right? So. Yeah, so and then of course a big salon business, etc. The point essentially being that only the makeup part is what probably is not at the top of mind at this point in time, but people are certainly focused on their own personal care, well-being, health, wellness, etc. Right? So which falls pretty much squarely in the areas that we work on. Right, so especially in the hair color, etc. categories. So for us, we've sort of pivoted our focus, right? So we are obviously a beauty company, a beauty tech company, as we like to call ourselves, and we have sort of pivoted our focus on the categories which we all now know as essential, and sort of going, into whether it's in terms of a go-to-market, whether it's in terms of a digital marketing, whether it's in terms of commercial excellence, etc., and e-commerce. Obviously, we've sort of focused on the categories which are at this point what we would call essential. And then once consumers are in the state of mind, to look at broader things, they start going out, etc., is when we start focusing on categories such as makeup, etc. Part one of your question. Part two is, I think, we've, as a part of this, overall I'd say, unfortunate situation around COVID-19. I think it's impacting pretty much everyone, right, across the world, whether it's people, companies, countries, you name it, economies, etc. Right. The point essentially being there that we've also sort of undergone a sort of a transformation internally and how we approach it, right? So whether it's global or whether it's in the market in India, we've obviously looked at what works within this market, what kind of messaging, etc. And we're trying to resonate, understand basically from a consumer's perspective what's really important, and make sure we are sort of addressing that rather than being a push. Rather, it should be from consumer perspective what's important at this point in time. Therefore, sort of look at it.
All right, Prabhakar, I want to come to you now. At this time, people are stuck at home. And, companies like yours who are in the fintech space have already been a little ahead of the curve, if I can say that, when it comes to product. You already have your apps. You already, are doing a lot. You've integrated your payments, everything, and you have an app that is really making it easier for people to come to your platform to invest, to trade or whatever. But at this point in time, when there is some panic and there is some uncertainty, is this a time for your people saying that, you can get great results? Or is this a time for you to build a brand association for the long term? And how are you doing it as opposed to your competitors?
Okay, first of all, thanks a lot for Exchange for Media team, for this panel discussion. And thanks, Anisha, for your question. I think very, very interestingly put, of course, as a BFSI business, we were ahead of curves. In case of angel broking, we have 30 years of our history behind us. And particularly last 4 years, we have done a lot of work for digital transformation. And it paid off beautifully. Since March, the lockdown started. So let me tell you that since March, for 3 months, we had average customer acquisition of around 1 lakh per month, 1 lakh plus. That's very, very high number.
So what do you attribute that to, Prabhakar? Why?
Anisha, I would love to do that, but I must say that this has happened because of course, change in customer behavior, and second, of course, our readiness, and of course, our advertising and marketing campaigns. So a lot of interest we saw in terms of organic. Like people are spending more time reading about your brand or trying to go through your website pages. And once they become interested, there is a customer DIY journey, which doesn't have any physical interface. So they can go through the entire journey and open a Demat account. Theoretically speaking, that is possible within 5 minutes. But there is a Aadhaar verification and a couple of other steps that may come in the way. Otherwise, within 5 minutes, it's possible for people to open Demat account, and within 15 minutes, they can start doing trading. So because of this reason, which is the customer interest, they were locked up in the home. They have plenty of time to explore. They could actually, they always have had interest in stock market, but they never found the time to explore. Now they could explore at home. And in March, there was a sudden fall in the stock market. Like in a matter of days, the stocks were low as
About
like
30%.
Yeah, 30%. You're so right. So these stocks were in multi-year lows. You are sitting at home and you have opened the Demat account, and then you start investing. Okay. So not only we saw a great rush in opening Demat account, but we also saw a rush in starting trading. So take, for example, usually what we call day 0, day 1, like post opening Demat account, if day 0, day 1 only 10% people trade, that number went to as high as 25%.
Okay.
So 2.5% jump, 2.5 times jump on that also. So coming back to your question, is this time to lure customer, or is it time to build a long-term brand? Okay.
Yeah.
Now, if you look at angel broking, last year we went in kind of flat brokerage. Okay, so we are a full-service brokerage house with a research and advisory team, best in class, and now we are available at brokerage prices as low as any discount broker out there.
Okay.
And what we call it, aage badhne ka smart sauda. Okay. So somewhere idea is not to lure them, because we
but
have
to offer them value.
Offer them value. And why is it long term? Because you just opening a demat account doesn't give me any revenue. And neither you buying stock for the first time doesn't give me revenue. What gives me revenue is that whatever investment you are making, you are able to see growth in that, and that makes you keep investing again and again, and that's where we make money as a brokerage house. So somewhere I think we have tried to balance both, in terms of educating them and also keeping them engaged with us. So that's my 2 bits on what you asked.
Right. So, Anika, I want to ask you, when everybody is panicked and, oh, there's a pandemic, let's buy insurance. That's the first thing that's going to come to anybody's mind. But, when the dust settles and people go back to doing other things, how are you going to keep that recall? When there's panic, pushing things on their social media, on the Facebook, it's not that tough, right? But how much inroad have you made during this time that even later people will come back to you when things seem normal and they will still value your product? What strategies have you applied now? What are the channels you think that work most effectively for you?
Sure. Thanks, Anisha and Prabhakar. I love your background. Takes us back to the original June. So thank you for that. Coming back to us, Anisha, I think what we've done is that we've broken this into 3 parts. The first is that, what do we do really within this pandemic period? And we have a very different problem, or I shouldn't say good problem, but a different situation. Ours is a category where people usually don't have time to spend on. They will come and say, oh, insurance is something that I have to buy and it's always at the back and not something.
It's a cost nobody wants to make.
Correct. So you have a situation where customers are coming to you and saying that, I need to buy insurance. But you also have 2 other phases after that. One is the first phase when, immediately when they come out of this pandemic phase, what will they do? And from a medium to long-term view, what can you do for the brand and the business? So first, when we speak about the pandemic, I think, yes, there is a big rush to buy insurance right now. What we've got advantage of is that what we were getting ready in terms of customer revolution and customers coming in, buying digitally, access to data, that's coming in handy. What we are also doing is that we are also trying to utilize the trust that the customer had on the brand, right? So this is the real time when customers really value what you've built as a brand, and you milk it and you say that, hey, I'm a brand that you've trusted for a period of time. And in these times of pandemic, you buy me. But beyond that, what we're also doing in this period is to actually create brand trust for future. So while there is, a part of marketing which is focusing on selling and, helping customers buy the right insurance products, we're also saying that at this point in time, we will do 3 things as a brand. We will provide them access to healthcare. And when we say access to healthcare, it is the right healthcare, whether it is hospitals or whether it is healthcare at home also. So a lot of play around adjacent categories. Insurance is typically bought to pay for hospital coverage. But today, many people cannot go to a hospital, right? I need a doctor on a video call, for example. Yes. So we are enabling adjacent categories for that customer trust to build for future. So we are providing access. We are providing information right now because, in this world, that's a big premium. Everybody is saying this drug has come, it will do this. Hospitals are cheating you, rates have grown.
Yeah.
So a lot of information that you provide at this time will help seed you as a brand which takes care of the customer beyond just paying for the policy. And the third is that with the Martech stack that we have already built, we are finding new ways of engagement. So when we talk about customer engagement and communication, it is more about what did I experience at this time when I was with you to spread word of mouth. So when you look at our Martech stacks, and we've spoken about it, and in the last presentation I heard the fact that it's so tough to build your own data stack, but how important and critical it is. So I think at Max Bupa, at least for us, we were on that journey for the last 2 years. So the fact that you have your own data, which is transactional, you also have a lot of digital identity data of the customer that we get. But, we also encourage a lot of zero-party data coming in, customers actually giving us their own information. So we speak about the role of IoT in categories like ours. We use IoT to encourage the customer to actually give us their health information and access, which helps us to personalize and customize.
So analytics is working for you. Now, I have one question for all of you, and I'll give you examples. Now, I can always buy lipstick online, Anil, but I like to walk into a store and try it out. I don't want to risk the shade and the texture and everything. Prabhakar, I like my broker to call me and tell me what is coming up, the rights issue or something like that. And Anika, when I buy an insurance, I feel more safe, more relief if I'm talking to an agent. If I have a problem, I will call him. If I have a claim, I will call him. Now, in this pandemic, this one-on-one has disappeared. So what is your strategy now? You will revert to a strategy where you will have a points person, or do you think habits will change so much that you might as well work in a model where there is, there is a connect, but not a physical one. There is trust without a person. What is your strategy? I'll one by one. If Prabhakar, you can go first.
Okay, so as I shared with you that we started the digital transformation journey 4 years back. Okay, so last year, apart from changing our pricing, we changed our business model. So rather than having field force during acquisition phase, we started with a telecaller. So for face-to-face interaction, we moved to a telecaller. And while we had a DIY journey available, we upgraded the DIY journey. Today, I can tell you for at least for the online, the DIY journey is as high as 32 to 35%. That's a high percentage. So customer come, they follow the 6-7 steps of filling the forms and all, and they kind of open their Demat account, right? So that's on the acquisition phase. Now coming to the service and revenue side, where once you become a customer, you need to be educated. You need to be told, that these are various segments, future and options, intraday, you need to buy that stock, this stock, platinum advisory and all of that. There also, we are encouraging more and more that our app should be so intuitive, the experience should be so interesting, and the knowledge point should be so available that customer can choose things on their own. Because while some people still like to call broker, but many a time some mis-selling may happen, right? Because you are not observing that interface. While our APIs are more towards customer doing their own kind of trading, but maybe because of human element, something can happen, right? So the point I want to make is that irrespective of the COVID-19, our focus was to become a very mass retail player. Today we are in top 2 in terms of market share of new Demat account opening. And in terms of active client, we are number 5, where we want to be number 3. So we believe we will make a very sizable business model where our entire focus would be that customer can do their own journey on our platform, not just during acquisition phase, but also during revenue phase. So somewhere, we are not too bothered about giving a human face or making a human connect available.
Right. So for Angel, that journey is already started. Anil, how about you?
Yeah, so for us, we've been in this digital transformation journey for the last few years, right? So as a part of the overall, transformation, again, referring to the point earlier where I said we are a beauty tech company. 2 years back, we acquired a company which is called Modiface. Modiface is into augmented reality, virtual reality. It basically, allows for the use case that you were describing, right?
Yes. So you can try it out at home and see yourself.
Home, on an app, on a website, or at the POS counter, at the counter. If you don't want to touch anything, you can have an iPad, look at it, and, just apply various shades of lipstick or compact or, mascara or whatever, right? Whatever beauty product that you're looking for. So in that sense, even, going to hair color, hair shades, shades of color, etc.
So how long have you had this and what's been the response during this time?
Oh, it's been brilliant, right? So as a product, it's been brilliant for a company. We've sort of deployed it across the globe. In India, we now have it live across our websites where we will be, we are looking to go live, talking to our e-commerce partners, and then, at the POS counters as well, right? So that's one part of the journey, really, in terms of contactless, fully digital interface as far as this is concerned, the transaction or the one-to-one is concerned. There's also a big part of the business that we're famous for, which is part of the salons, right? The hair salons, right? So hair salons for us is extremely important as well, right? So again, there we have an app called Style My Hair, which is again, powered through Modiface, where customers can check out different hairstyles, different shades of color, etc. And then what we've just started, with our as a response to COVID, because no one wants to go to a salon, etc. Right? So we've started social commerce with our salons, right, where your hairstylist, knows what you want, what kind of products you're looking for. You can't obviously visit the salon, but then the products can come to your home, right? So the stylist will reach out to
suggest
you.
something to you. Okay.
Yeah, exactly.
Right.
And he connects with you. And
yeah. So after talking to Prabhakar and Anil, it seems that this is a strategy which is not reactive to what has happened now, but has been in play for some time. So Anika, for you, do you feel the customer going ahead has enough trust to just go through your website and make a purchase and not get back to an advisor? Are you playing for that in the future?
Absolutely. I think the path to purchase will change fundamentally for our category, and you will see more and more people getting the comfort. But as some of my colleagues said, we'll also build in solutions which give them that comfort. So, whether it's a video advisor or whether it's an advisor always available, that will be there. But also for your agent advisors, if they'll still play a fundamental part, right? Human touch will not go away. And especially for us Indians, what we're also using this period in time is for giving enough data and information about the customers to our agents. So, when I come to you, I know more about you, and there is a more personalized offering in place for you.
Okay.
And once, you have a touch, going forward, how do we really go forward and almost have no human touch with that customer once the first trust and first touch is established? Okay. So there'll be a play of both, Anish.
Okay. All right. I would like to thank all of you for taking the time out and sharing with us your experiences and how you are adapting your marketing strategies to the post-COVID world. Anika, Prabhakar, Anil, thank you so much for being with us on the Martech India Bridge conference. Thank you so much for being with us.
Thank you.
Thank you, Anisha.
Thank you. Pleasure.
Thank you, Anisha, for this. We have up next a very interesting conversation coming up with Aparna Mahesh, CMO Bank Bazaar. And the discussion that we will have with her, we'll be asking, you and I will be asking those questions, is how to build brand resilience to combat disruption. And if you see right now, we have faced the most disruptive phase ever, everyone is like coming to terms with this, and there's no strategy in place. There was no thinking. It was not expected. So how do we deal with these sudden disruptions? That is the discussion we'll have. So we could begin. If you have a presentation in the beginning, we can start with that, or later on. Aparna.
No, I'm just going to talk you through some of the points.
Okay.
I don't have a ready-made presentation.
Right. So, Aparna, a quick introduction about your company. Now, yours is an online marketplace for instant customized rate quotes on loans and credit cards. And you can shop for loans, cards, or anything one wants online. It's like an Amazon for bank loan rates, etc. Now, the first question that pops to my mind is, can you tell us what is the extent of change that you have seen, say from during this period, which is like March, April, May, as compared to a year ago? Now, you have been operating for some time, and this marketplace has been around. How have things changed for you in the last 1 year, if you look at these 3 months?
Sure. I'll just make a small correction. It's not just about loan rates. We are
you can make a purchase also. Yeah.
You can go ahead, make your application, and we match you with the right products, and you can go right ahead and apply. And so that's we work day by. So I heard one of the speakers earlier talk about the fact that it's not like they opened up the strategy just post-COVID. I think it's been pretty much the same with us. I think the company has been, we're a 12-year-old company, and our vision has been to match people with the right financial product in a secure manner and in a paperless manner.
Okay.
A lot of banks, when you have to open an account today, be it for a credit card or for a personal loan, still has a large number of offline processes, right? You've got to, it involves meeting with a bank representative, signing off, photocopied documents, handing it over. So while for the last 10 years or so, we've been working with a technology to try and make this as seamless and paperless as possible. I think what we're seeing right now, the writing is on the wall. People want contactless solutions, right? So that you can access within the comfort and the security of your own home. Be it your groceries, be it any kind of service. And definitely now, when it comes to your own financial services, they don't want to step out. They don't want to meet anyone. They definitely don't want to walk into a bank branch. I think that that even prior to COVID, we were hitting very, very high numbers in terms of digital finance demand, right? People want, I mean, the rest of your life, you're getting everything that you want. You're tapping your phone and everything is coming to you. So why would you hold back when it comes to the financial products that you want? So I think the demand was building up. Currently, what we're seeing is, I don't want to meet a bank rep. I don't want to do any of that. Can this product be delivered to my phone contactlessly? So I think that a huge shift that we've seen. See, eventually, contactless for everything, whether it's communication today or commerce. And I think we're seeing the same when it comes to financial services as well.
But, the question I had was, can you give us some numbers? Because, we were just discussing that at this point of time, there's a lot of uncertainty. People are not sure about going ahead with the purchase. Even if I come and see, okay, rates are coming down, has conversion increased? Has traffic increased? So do you have some numbers to tell us how business has changed in these 3 months for you?
So it's very early days. With financial products, it's a longer cycle eventually. But what I can tell you is after the initial slowdown, what we are pushing now is a lot of video KYC based application partners, while earlier that was pretty much zero. So what happened was in Jan 2020, made this really progressive move of allowing video KYC for onboarding partners. And what earlier would have taken maybe a couple of quarters for it to become mainstream amongst many of our partners, we're already seeing that a lot of banks, I'm sure you've been, if you're tracing this space, you know that IndusInd has talked about it. Various banks have been talking about video KYC. So we are definitely seeing that there's a huge uptick on in that particular space. The point is also that today, with extreme uncertainty around people, there is a demand for liquidity. So definitely, a loan to fund a big ticket purchase or a wedding or any of those, which is why these loans were taken earlier. They definitely are, whether these are salaried individuals or small businesses. How are they doing this without actually going through the rigmarole of all the offline processes that we had in the past is what we are seeing building up. The entire ecosystem, I think I want to add that, I think the entire ecosystem has had to sort of overhaul itself during lockdown, ready to service this entirely contactless demand that has come from COVID. So it's a little early for us to share numbers, honestly, because most of April sort of, we've been in a bit of a lull. There's been the lockdown. People are figuring out a lot of other uncertainties in their life. It's only now that we're slowly seeing some of these trends emerging. I think we'll need to give it another days.
Right. Well, I want to ask you a question that, banking is a very sensitive sector, finance, I mean to say, overall. And now everything is online and building that trust, those who were doing offline banking are still now going online, but they're very new to it right now. So how do you build that trust that, it's safe environment? They always have these concerns. So as an evangelist of online marketplace in finance, how are you ensuring to build that trust factor in new consumers?
I can tell you this, Bank Bazaar has never been a very big media based brand. I think when it comes to financial services, awareness is barely scratching the iceberg, right? Because where the customers are at when it comes to financial services, even the most confident of customers is usually a little uncertain, a little indifferent, and wants to do a lot of research and wants some sort of expert advice, if you will, on whether they're doing the right thing or not. Over the last decade that we've been around, we've definitely seen that the Indian consumer has become more self-reliant. But at the end of the day, if your brand has helped them in the past make the right decisions, if you've helped them with the right tools, with the right content, for instance, then that trust is something that has already probably been built with you. And that is only leverage and go from strength to strength from here on. I'm not sure if this would be the right time for you to suddenly come in and start building trust. It's a fairly long, drawn-out process, especially when it comes to something as sensitive as people's money. So I can talk a little bit about the fact that marketing has been the backbone of pretty much everything we've done till now. For the last 10 years, we've invested a significant amount of time, energy, and technology in just creating content. Because as I said, every Indian customer currently, is looking for information, for validation about their decision making, the right financial product. And based on that, right, we've seen that eventually, they keep coming back because the stickiness is big. So they need to figure out what are the elements of trust that financial services brand need to sort of work on with your customers.
Right. So, Aparna, you said that content has been a big backbone for your success. In your marketing stack, what else has worked in your favor? Has it been analytics? How have you been able to personalize the right content for the right audience? How about data safety? Because, these are sensitive things. Do you have a secure technology that brings in that, confidence in doing that transaction on your site? What has worked for you in your stack? What would you rate is the top 3 things that has made it work for Backpass?
So we're a fintech company. You can't take the tech out of fintech. Eventually, what we've done over the last 10 or so years is essentially make sure that we are leveraging technology through the entire customer journey, every part of it. So when I talk about acquisition, acquiring is content, which has been the predominant strategy that we follow. As I said, we put in significant investment in terms of teams, as well as in terms of technology to just be able to disseminate the amount of content that we create to our own base as well as new customers. What happens when you acquire customers on the back of very deep financial content is that they already come in with an element of trust towards this brand. It's not, they haven't just come in because, hey, this brand made an interesting ad we're all about. They come in saying, hey, these guys had an interesting point of view on, how much of my income is in an SIP or how much I invest. They come in, the journey begins. Now for a fintech as a category, how do you build stickiness? You're not like an e-commerce company where people can come back and you can keep, feeding their impulses to keep coming back. So what we have is essentially there are 2 pillars to build this sort of stickiness. This is our credit score program that we run with Experian. This has become a huge success. Literacy has sort of grown in India. We're seeing that the numbers of people, we've seen 111% growth in the number of customers that come back and check their credit scores on Bankbazaar. So you can just imagine the kind of numbers we're talking about. We have 40 million registered customers today. We do traffic of about 30 million a month. So if there's 111% growth in the people coming to check their credits, what we know is a large part of these people come every month to check their credit scores. Typically means that they want to stay on top of their credit score, they want credit worthiness, and about a large chunk of these people are under the age of 40. So we've built a good sort of pipeline of customers as they make their way down their own financial journey. The second part where we've leveraged technology really well is via our mobile app, where we essentially it's a sophisticated personal finance management tool, which sort of helps you stay on top of not just your credit score, but also keep up with your payments, sort of have a good sense of where your finances are at. So these are what we have leveraged a significant amount of technology on towards building stickiness and, of course, helping customers in their financial journey. Let's now come to the marketplace itself. That's the third point that I would talk about. Long partnerships with the leading banks and NBFCs in the country. So products for pretty much every kind of customer. What we've been able to do very successfully by leveraging machine learning is that be able to match the right financial product with the right customer in a matter of minutes.
Okay.
Now, when you're talking about who have, who are extremely impatient, even when it comes to financial services, and they're dropping off the funnel, they're, happy to drop very quickly. We are able to leverage this sort of intel that we have and hold them through the entire customer journey, right? Do that. It's because we have a single view of this customer with all the data that over the years, so that at every stage we're able to sort of nudge them say these are some of the big programs that have really worked for us get to where we are.
Right. I have a question. Tech has become the dominant conversation, of course, before even COVID. COVID is not the beginning of tech, as many people keep asking that, it's an online push, but it's been there for a long time. But tell me, when it comes to deciding what goes into a stack, is it the CMO, the CTO, or the entire management? How does it work? Who decides what? How does it? Just kind of curious.
So, startups are really sort of democratic, not very hierarchical at all. But in this case, given the intense amount of sensitivity around this, the fact that there are a ton of regulations in place, this would be something that would be taken. The decisions on this would happen very closely between the product team and the technology team, of course, and the entire senior management signing off on it as well.
Right.
Aparna, you spoke about video content for your customers. See, I think what's worked for you is good content, and your brand resilience has been built by the fact that you've used your machine learning to customize it to each of your customer according to the data you have. Now, what is the next frontier? You spoke about video. What is next now? If we have your traffic is so high, what is the next thing you have to build on so that you keep your customer and get more?
So as I said earlier, I think the brave new frontier is contactless, entirely contactless finance, which basically means 100% end-to-end digital checkout without meeting a single person, without handing over a single document. This is already something that we're working very closely with to sort of enable. Video KYC, as I said, is a very, very progressive move by the RBI. And I think it was completely sort of, it just arrived prior to this COVID blow up that has happened. And it couldn't have been tiny than it actually has been. And we're already, working. So currently our short-term focus definitely is going to be working with all our partners to get this enabled for all of their products, because hey, offline is going to struggle. This is something that we're hearing from all of our partners. We look at the situation of our big cities. There are lockdowns, we open up, full of lockdowns happening again. It's going to be very difficult for people, for the DSAs to go collect documents at this point. There's a lot of uncertainty looming large. So at this point, for growth, I think the enabler is going to be digital KYC, and that is where our focus will be from here on.
Right. So that brings me to the security point again. It's really nice that RBI is allowing video, but how do you sign digitally if you don't have a verified digital signature? How do you know that a payment made on your site is absolutely secure in a world where cyber attacks are increasing? So what are the security features that you have already, and is that also a frontier that you're looking to reinforce going ahead?
So I think video KYC, the RBI requires that a bank essentially validate and sign off, right? So that is absolutely mandatory. The second thing is that given that we're talking about loan applications, credit card applications, there isn't really a payment involved in terms of verifying identity, verifying address, and verification of the customer KYC. So at all times, we are sort of ensuring that we maintain all the security that has been prescribed by partners, by the RBI. And as I think customer currently, it is mandated that this is verified by a bank representative. So that is the process in place currently. It's extremely safe.
Okay.
Right. Aparna, I want to come in from a communication and marketing communication point of view. This is also a tough phase emotionally for consumers and brands. It's not just the normal phase. Tell me, maintaining that connect with consumers during these times, how have you been kind of doing it, enabling that same emotional connect with your brand? Despite, a lot of things are happening in the back end. Could you take us through that, a little bit of that story?
Absolutely. Imagine, the consumer has been going through different waves of extremely strong emotions. When it all started, there was the shock for a while with everyone trying to figure out it. And now, as we realize that this is the new reality, I think the consumer sort of is moving through different stages. As you rightly said, I think emotional sucker is something that they're looking for. But I think when it comes to their finances, they're also looking for brands to help them make sense of this, help them with the decisions that their future is going to depend upon. So again, I will come back to what we do in financial services, at least initially, putting out enough, ensuring that we were communicating with all of our stakeholders, whether it's the employees, whether it's with the partners, whether it's with our customers. With the customers, it's all about, these are the things that you need to be worrying about your finances currently, right? So what is it that you need to do in terms of your savings? What is it that you need to do in terms of investments? What about insurance? What do you do about loans? The customer today is being hammered with all kinds of updates, right? We have the RBI regular updates. So the first thing that customers need to know is, how does this apply to me? Moratorium, do I not? What happens when I do that, right? So at least initially, we put out a lot around some of these movements that were happening, which were likely to impact them. Now we've even gone deeper, because it's much more than just saying, hey, focus on your cash, focus on your investments. It's about helping people with very tangible problems about, do I continue with my SIP, or do I do an EMI? These are real problems that people are facing today. Do I pay my premium, or do I repay my EMIs? Do I take the moratorium? What do I do? So this is our content strategy right now. We've been working overtime. The amount of content that we put out currently, just in terms of very specific bites in terms of this or that, your finances in this sort of a situation. What do you do when it comes to insurance in this sort of a situation? If you've been laid off and you don't have health insurance, what do you do? So I think it's all been around information. As I said, with finance, it's always about, even at the best of times, seeking information. These are, you could say, the worst of times, or definitely the most volatile of times. It's been about sort of hand-holding customers, giving them the information for them to navigate these paths as they take certain decisions about their finances, in the near term as well as in the long term.
Right. So
come back to content.
So I wanted to understand, how do you do this? I mean, is it machine learning? Is it analytics? What is the suite that is working for you? Because obviously you have data of a lot of customers, but you are customizing it in real terms, in real time. If the RBI has come out with a moratorium, this is something new. You have 40 million customers with different data. How have you customized the solutions that you're offering them? What has worked for you here?
So over the years, we have a fairly good sense of what are the broad concerns that customers are likely to have given certain movements in the market. I think this is intelligence that has been built over time. Okay. So, and we also, because we, essentially we are specialists in the credit side of things, right? So with credit cards, personal loans, etc. So the first thing that we know the people are going, it's at the end of the day, understanding customer behavior and psychology. It is basically, if the RBI says there's a moratorium, the starting point is, put yourself in their shoes. You know that this is the question that's coming to your mind. So we always start at a high level saying moratorium, this is what it means. This is what you will be hit with, and if you need to take the moratorium, this is what you need to do. So we sort of were among the first that started talking about a bounce back, because there's no denying that you may need to take a moratorium, but if you've taken it, how do you bounce back and get back to the point that you were pre-COVID? So these are all learnings that we've had over the years to sort of guide us to understand that this is the large profile of customers that we have. These are likely to be their concerns. The second thing is that when I talk about content, we disseminate a lot of content through the leading publications in the country. So we are in constant touch with the editors at all of these publications. We know the kind of queries that are coming their way. We know what the pulse is. And based on that, we customize a lot of our content for that as well. So it starts at a high level saying, hey, these are likely to be the questions. We go deeper and deeper based on what we hear from the ground. So that's pretty much how we go. So when we talk about moratorium, content about that for about 2 weeks, 3 weeks. When the moratorium was extended further, we continue to write a little bit more about that. So that's essentially the life cycle of content around any of these events that happen.
Right. So We have 5 minutes more, so I have one question. As the head or as a leader, who is running Bank Bazaar's, strategy, marketing strategy, tell me what are the key learnings from this, the last 90 days, if I may ask you these. Some key learnings.
So always, I think the first, which is that digital is here to stay, and I don't think anyone needs to question that anymore. I think.
Now it's proven.
Sorry?
Now it's proven. I mean, now everyone is
proven.
convinced.
Absolutely. So that's happened. I think it's about, I'll break this into two. I think internally with the teams, when you and you understand that this is the human side of it, is essentially it's important for everyone to sort of stay calm and, figure this out in a very rational and sensible manner. At the end of the day, we operate the space and one has to be extremely. I think it's about looking at the immediate short term and then looking at eventually the long term. As I said, I think it's clearer now than ever before that digital is the way forward, and we are very excited about the journey that lies ahead for all of us in this space.
Right. Well, one last question from my side, then Anisha. Bank Bazaar has this history of staying ahead of competitors. You have created that kind of a brand. When it was COVID or not COVID, you still have that advantage. How do you maintain this? How do you make it work, consistently? That you stay ahead in this case.
So I think, it's a little bit of everything that I've already covered. It is essentially understand what your customers want. And when it comes to financial services, customers in India, their requirements are very, very different. We've seen two different generations of people entering the workforce, and they each come with their own set of so guide them. There's no need to sort of educate them enough information, empower them. I think that's super important. Second is, I think, the product. I mean, unless the product is fantastic, unless that experience for the customer when they come there and they're looking for a personal finance product and they're matched with the absolute, the right and the most relevant products for them, I think that pretty much is something that we constantly work to stay on top of, because there is really no substitute to that. And eventually, as I said, through all of the technology that we've been able to leverage, I think we're able to bring back our retention high, our repeat customers are extremely high. So we're able to bring the fold, and that's how we've been able to grow largely organically through the entire lifespan of the brand, if I may say so.
Right. So Aparna, going ahead, you've told us video is important, but what has helped with the resilience of the brand? Your content is really strong, but what has endeared you to your customer that, even going ahead, even if, things change, this is the thing he wants to do? How have you built the brand resilience?
See, I think it's about how do you delight the customer at every touch point when the customer comes in, right? Whether he's looking for information on personal loans and you've given him so much of information that he's simply delighted and he says, hey, I've got everything that I needed to know to make up my mind. I think that is something we continue to do. The second is eventually, quickly, today's customers, they want everything delivered to them very, very quickly. So once you know, have you been able to match him to the right product? Have you been able to sort of help him, especially with COVID happening right now, and they're stepping out and, at the same time needing easy contactless access? You've been able to help them do that. I think those are focus areas for us, and those are where I think we've been able to do pretty well.
Right. Before you go, I want to ask you this question that, we have seen a spike in online transactions now, people going online, but once the things start coming back to normal, the vaccine comes in and everything else, do you think what would remain? What would be the advantage, the takeaway for online players out of that? Do you think that the spike will remain or will it go down to where it was? Are you prepared for that phase? I mean, how do you see that?
No, I think, the point that I mentioned earlier is on the demand side, demand finance was touching all-time highs even pre-COVID.
Right.
Look at the consumer that we're talking about. There's been a complete Amazonification, if you will, of service that we want. Why would we want it any differently when it comes to financial services? So on the demand side, I think it was there. I think, as I talked about, it's the ecosystem, the requirements, a lot of the processes continue to remain offline. So I think currently the boost that has happened because of video KYC and things like that, I think that has risen up to meet the demand. So I think it should pretty much stay where it is and only go higher and higher from here.
All right, Aparna, thank you so much for joining us and sharing with us your experience during these post-lockdown months where you have given a super experience to your customers and they've been coming back to you. You managed to build that brand connect with them. And here's wishing you all the best going ahead as well. Thanks so much.
Thank you so much.
Thank you, Aparna.
So, Rahil, when was the last time you walked into a bank?
Honestly, I've been just doing online for the longest time ever. I mean, I was like conditioned for online, but now definitely I think that is the way forward. But I have my own little bit of inhibition. I don't know. People still love to go. The offline experience has its bit. It will stay relevant. But we don't know when would that come. Would it be online or offline, or would it be this combination of two? But right now,
I think I am not ever going back. I'm even scared to write a check because I feel even my signature will be wrong. I've forgotten even to write check now.
And Jared is agreeing, I think, what we're going to do. Yeah, perfect. Over to you. I will see you soon.
A quick introduction about Jared. Jared, thank you so much for being with us. Jared Gringas is the Managing Director and Analyst of the Real Story Group. He has been covering the omni-channel digital marketing technologies, including digital asset management, omni-channel content platforms, web content management, email and marketing automation, and a whole lot more. Jared is also the co-author of the book, The Right Way to Select Technology. He has advised clients like Delta Air, Coca-Cola, Ford, Harvard Business School, and many more. It's such a pleasure and privilege to have you with us, Jared. There are so many solutions there. We want to understand, we are also getting questions on how do you build your state-of-the-art Martech stack? How does it look like? How do you build? What do you pick? What do you give up? What are the solutions that will fulfill your needs, and how data analytics, MI, AI are going to help in the personalization of customer experience? Take it away. Please tell us how we can navigate this treacherous path.
Great. Thank you so much. And thank you for just inviting me to be a part of this today. I've very much enjoyed all the speakers that have preceded me. It's been a fantastic discussion, so thank you. So I think it's important to start off with a bit of a disclaimer, because the title of this session today is the state-of-the-art Martech stack. And just like Dr. Durga earlier said, there is no easy solution for putting in a stack. You can't just buy a stack from a vendor and expect to get your stack out of a box and everything will work perfectly. Just like that is true, in my experience, I've yet to see a perfect stack among our clients. No one's doing omni-channel perfectly. No one has the state-of-the-art Martech stack. What we're all doing, and as some of our other speakers have talked about today, is we're all on this journey to this common goal, though. We all want to delight our customers and our constituents at every single touch point. And if that's our common goal, we need to put a stack in place that allows us to do that. So what I'm going to show you today is what we're seeing from our clients, and in kind of amalgamate some of those themes that we're seeing from our clients to show you some models that we think might help you in constructing your state-of-the-art Martech stack, at least as it exists on your stage of the journey. So a little bit of context here. Real Story Group, the company that I work with, and it's a industry analyst firm that monitors a number of different technology marketplaces with the goal of really helping our clients make the right decisions for what it is they're trying to do. Now, that manifests itself in several different ways. Number one, we help people pick the right technology. Number two, we advise our clients on their overall omni-channel stacks, a lot of what we'll be talking about today. And the third way we work with our clients is more of this council level engagement, where we bring together our clients to work with each other and learn from each other as peers. And then not only do they learn from each other, we learn from them, we pass along some of our research, but these clients then inform our research roadmaps as well. So again, a lot of what I'm going to be sharing with you today is directly from these people who are making decisions at some of the largest enterprises in the world. We call ourselves a different kind of analyst firm. We don't think we're built in the same vein as kind of the traditional analyst firms, and that's for a couple different reasons. Number one is our focus. We're only looking at omni-channel technologies today. And the other reason is our independence. We don't work for software vendors in any way. Okay, we don't speak at their conferences. We don't accept meals for them. We don't write white papers for them. We don't advise them on their product strategy. Our goal is to solely sit on the buyer side of the table and help you make the right decisions for what it is you're trying to do. So let's look at the first model. This is the world that we live in. You know, this is our kind of famous or infamous subway map, if you will, where we try to plot the different marketplaces that we're watching on a daily basis. If you break it down, there's, I think, 8 different subway lines that each of which represents a different marketplace. And on those subway lines are a number of stops. And I think we're up to about 125 different software products from over 100 different software vendors that we're constantly watching, and these are what we'll call the most significant in the marketplace. You know, we're certainly very cognizant that there's new vendors coming on every day, but we think these are the most significant in the marketplace as we see it today. And the good news that I'll pass on to you as buyers is you have options. Not only do you have some of the biggest names in software at the hubs, if you will, of this map, but you also have a lot of best of breed options in the periphery. And I think having options, while it can be daunting at times, is fundamentally good. I think, you know, if we had a single vendor dominating, I think we'd all be feeling pretty restricted. But to have this type of options is good. So options are good, but how we digest all this information that's being thrown at us from all these different vendors makes this difficult, and that's what I think we as analysts are here to help with. We're going to help try to make sense of this, and I'm going to give you some frameworks today to help you see the marketplace in a different way, and ultimately see how you can construct your stack in a way that sets you up for the most kind of success. So it wouldn't be a Martech presentation without this slide, right? We've already seen it a couple times today, and I'm sure you'll see it more times over the next few days. And I'm thrilled to hear that you have Scott from Chief Martech as one of your speakers. But I love this. I love this diagram, not because I can make any sense about it, but it just shows that there is this world is crazy. Let's be honest. There's so many options. There's 8,000 different vendors on here competing for your attention, your wallet spend, and a place in your stack, right? All of them are trying to get into your stack. They're trying to carve off little pieces of your stack, and some of them are trying to carve off large pieces of your stack. And again, this goes back to this 8,000 vendors is too much for anyone to make sense of. So we have to start making some choices here as to what we're going to focus on and where we're going to apply our attention, our money, and who we're going to give a piece of our stack to. So in order to do that, I'm going to present you with a mental model that I like to use. Now, the shopping mall is maybe not as popular as it once was a decade ago, but I think many of us are still very familiar with the concept of anchor stores and specialty stores and kiosks in the hallway. The mall is made up of all sorts of different sizes and offerings. And you know, when we look at the options presented to us as buyers of Martech technology, I think it's important that we start to think in this lens and say that, you know, all 8,000 of those vendors on the previous slide are not created equal. We need to identify which are our foundational elements. What are our anchor stores? What are our specialty stores? And what are our kiosks that allow us for a little bit more experimentation? We might be able to be easy to switch in and out of, but which are our anchor stores that we're going to truly build around? So we kind of used this model in working with a number of our different clients. Here's one example that we did with one client where we identified web content management and digital asset management and marketing automation, analytics, and CRM as their anchor stores. Now, it's important for me to point out at this stage that your Martech mall is going to be different from this Martech mall. Everyone's Martech mall is different, and that's okay. But what I'm challenging you all to do is not look at all those vendors equally, but identify what are your foundational anchors in your organization. What should be the foundational systems and technologies that you're going to build your stacks upon? So that's step number one. The next thing that I wanted to call out here is once we identify our anchors, how do we start to put the pieces together? So as analysts, what we try to do to help our clients here is to give you some reference models to kind of challenge your thinking and get you to think in maybe different ways than you've thought before. And this is not a new concept, but even back 20 years ago when we started this company, we started out with some early reference models in the early 2000s to talk about how people were executing on the multi-channel challenge. People might have been talking about omni-channel back then, but let's be honest, they were really doing multi-channel at best. And many of you still today are doing multi-channel at best. But this is one of our early reference models which showed some source content from databases, structured content, unstructured content, and some media, being sent to a single technology, and in many cases an early content management system that had some library services like check-in, check-out, version control, and maybe some factory business services like some rudimentary workflows, and then ultimately this single system would publish out to multiple channels. Now, those channels were pretty rudimentary back in the early 2000s, but we're talking web pages, some wireless devices, we're talking about XML syndication, and maybe we're generating something like PDFs, but simple model to think about consolidated different types of information into a central point and then distributing to multiple channels. And that worked for a while until we got to the 2010s, where we started to get a little bit more serious about consistency of our brand, of our message, of our content, because we started to add more channels, more areas where our clients and constituents are interacting with our content, our assets, our experiences. So as more channels came along, the demand to do this better and more consistently became more and more important. So what we saw happening in the 2010s is what we're calling this horizontal integration. So as I'll point your attention to the area, the band, the third band from the top, which we call our content and engagement management band. And this is where these technology emerged to serve different touch points. So in addition to the web content management systems that we had in the early 2000s, we started to think about more of in terms of marketing or automation as it comes to our email. Can we automate how we reach segments of our customers? Also, we started to have this new channel in terms of social networks, and we needed a better way to control our message to different people in the social arena. And so what we started to do is say we can't be having different messages in all of these different channels. So so what happened was there was this point-to-point integration that started to happen. So in a perfect world, your organizations recognize the need for an asset management system to control their images and their video, and then they push those assets to these various systems, whether it's the web content management, the marketing automation, or the social engagement tools. And likewise, you had point-to-point integrations between web content management and your email tools, or your web content management and your social tools. But it was a little bit disjointed, and only the most sophisticated companies out there had any type of integration across the board. So this was useful and for many years, but what resulted in the early 2020s is something like this, where not only are these content and engagement management arenas where your employees that are creating experiences doing most of their work, these these systems tend to get more bloated and bloated and bloated as more content got in there, more data got into these systems, more rules and personalization rules, segmentation rules started filling up your web content management systems, your email marketing tools, your social engagement tools. And then you add into other tools like Salesforce, and you think about the people who are manning your call centers, and they have all this information that they're passing along to the people who call in and ask questions. And that was all well and good, but these systems became bloated and bloated and bloated, and invariably disconnected from each other. And so we see these silos developing. So I think that theme around these silos developing really started to have a bit of backlash when it came to what customers were experiencing, and many organizations started to feel some pain from a disjointed experience that their customers were experiencing. And I think it's important to talk about, as marketers, as anyone who's creating experiences in today's day and age, what are we trying to do? We're all trying to create omni-channel experience across the board at every single touch point. Absolutely. So what does that mean? We want to get the right content and message to the right person in the right content at the right time, and ideally measure the effectiveness, right? If that's the perfect world. And we need to be able to account for the channels we know about today, and we need to be able to account for the channels we don't know about in the future. Because none of us could have predicted every single channel that we need to publish to today, nor do we know what's coming next, right? So we need to prepare for ourselves for an unknown future in a way that truly scales, so that we're not reinventing the wheel every time. But unfortunately, like I alluded to earlier, the reality that many organizations are in today are that this content, this data, these engagement rules, our planning and oversight capabilities in our analytics have found themselves in all these different silos, right? I know that many of you have really bloated web content management systems that have a lot of web-only content, a lot of customer data and product data built into those systems, a lot of journey rules and engagement rules that are really quite well and well done and organized, but they're only for the web or mobile. You start to want to apply those same journey rules, those same decisions that you're applying to your website to these other channels, and it's really hard because they're all that content and data and rules and analytics are stuck in these systems, and it's hard to break out of that. And unfortunately for customers, they're feeling that pain. As Dr. Durga said earlier, he gave some great examples about how some things he viewed on his mobile device, and when he went to the website, he'd get different pricing, different experiences altogether, and that leads to a lot of distrust and in many cases abandonment by the customer and or potential customer, and just can't have that. We've got to break down these silos. So some of the reasons for these silos, I think it's just kind of how we all grew up. We're still in early days of the digital world. So believe it or not, I think if we look back 20 years ago, when our CMS was our main communication channel to multiple outputs. We were all learning as to what the capabilities of this type of technology were. And so we aligned our teams to those technologies. I'm sure many of you have some very specific web teams and a social team and an email team, and maybe you have a sales team. But oftentimes, or too often, I should say, these teams don't coordinate and don't even talk to each other and don't share what they're doing. So what we're seeing is that creative content and messaging can become very channel specific. And again, these content, data, and rules become platform specific rather than enterprise specific. And if that's the case, it's impossible to create customer experiences. So how do we do something different? So I'm going to present to you today my view of where the stack of the future is going. And as I mentioned, this is a journey. So some organizations are further along this journey than others, and some of them are just getting started, and some are doing this fairly well, but no one's perfect. So what I'm going to introduce to you today is what we like to call a foundational layer to our stack. And here I'm going to talk about ways that you can implement systems that house the fundamental building blocks of experiences. I mean, you're going to hear me say this time and time again, your core content, your core data, your core rules, your core analytics, your core decisions, your core planning and capabilities. If you identify what your core building blocks are that are independent of a channel, and you can store them at a foundational layer that can then feed your systems of engagement at a middle tier, these are the enterprises that are going to be most poised to scale for both today and that unknown future that I mentioned. So let's dig into a few of these core pieces, if you will. And again, I do want to just say that this is a single view. This is not a perfect view. Depending on your enterprise, your core building blocks might take a slightly different direction as well. One example that I'll throw out to some of you, if you're a CPG company, one of your core building blocks might be your product information. So your PIM system might be one of these pieces here as well. But in general, I think most of our organizations can recognize that for us, our building blocks are content. So we started calling this red block in our stack our omni-channel content platform. And when I think what should go in an omni-channel content platform, this should be my single source of truth for core customer engagement objects. So this might be assets, this might be stories, this might be themes, this might be micro experiences, this might be snippets of text that are relevant to channels across the board. But they're independent of the destination. They're core pieces of content that can be utilized by anyone across the organization. The orange box here is also pivotal to most enterprises, and that's that. And I've heard this come up today. It's that single view of your customer, right? And Dr. Durga brought this up earlier as well, and he highlighted the importance of the CDP, or the customer data platform, as a marketer's view into what we know about our customers, so that we're able to align that content with the right customer, right? If we have a good view about those two building blocks, we're well down our journey. But speaking of journey, I think what ties this all together is the rules we need to put in place so that we can determine what content gets delivered to which customers and when and how. And so I think there's a lot of emphasis being placed right now from especially forward-thinking organizations as to how can we manage the decisions and rules that we place to deliver which content when to which customers. So we might have different rules in place to say, if someone went to Facebook or Twitter or LinkedIn and engaged with a piece of our content in the social arena, but then filled out a form on our site, and we know they called the call center 3 times, maybe there's a specific piece of content that we want to push to that user. Likewise, maybe there's a totally different piece of content, a different message, a different experience altogether that we want to send to someone who's engaging with our content for the first time, right? It's a very different journey, and we need to think about journeys not in terms of a channel-specific platform, but as something that we can manage across platform. And then finally, the green box here, to do this right, this is sort of the holy grail of all management in the marketing space. Everyone wants to have a clear view of what's going on across Martech, across all of their campaigns, across all of their planning, across all of their resources. And this notion of having a dashboard view that gives insight into what content is flowing through the pipeline, what people are working on, what we're spending on this, and then in a perfect world, a round trip analytics coming back to say, is what we're spending worth it? Is it having an impact? And can we prove that it's having an impact? And can we prove that certain things are working better than others? And can we use those analytics to inform us to make really smart future decisions? That's the holy grail if we can achieve it. So here's another view of that holy grail. If you have these foundational elements in place, I think we can be sure that we're creating consistent messaging. We can make our customers feel that they actually, the organizations actually know us. We can have coherent interaction from system to system to system and touch point to touch point to touch point. We can have consistencies of our stories, and we can have true relevant data coming back to us so that we can improve on this experience and make smart decisions going forward. So I give this to you as again a reference model. It's a model to challenge you to think a little bit differently. I hope that you think about what your building blocks are and create that foundational layer. And one of the interesting impacts that we've seen coming out of this is for organizations that have put some of these foundational platforms in place that are a little bit further on this journey. We've seen that content and engagement management platform tier actually get thinner, right? So maybe you don't need as heavy weight of a web content management tool or social publishing tool or email marketing tool or even sales tool. What if you could thin out those systems and make those a little bit simpler, and instead, put your resources in developing this foundational layer that is truly focused on what is appropriate for the entire enterprise. So I'll leave you with this, a few takeaways. So number one, as I mentioned, the state-of-the-art omnichannel stack is aspirational. No one has that state-of-the-art stack just today, but this is probably one of the biggest themes that we've noticed from all our clients, no matter what industry they're in. Everyone is trying to do this. They might call it different things, but everyone is trying to create consistent on-brand experiences at every single touch point. I challenge you to identify your anchors. Everyone's anchors are not the same, but really push yourself to thinking about what are our true building blocks for our experiences to create delightful experiences for our customers. Break down those silos. Wherever you can, move those foundational building blocks lower into your stack. Maybe you can thin out your experience and engagement layers, but move those foundational building block elements lower in your stack. And I think if you do this right, what you're doing is you're trying to find that right balance between structure and flexibility. Just like that shopping mall, right? If you put those foundational stores, those anchor stores in place, the right anchor stores in place, hopefully you're not swapping those out on a regular basis. Hopefully those are there for the long term, but it gives you the flexibility to swap out, the kiosks or the specialty stores, because we all know there's more technology hitting the market every single day. More experimentation needs to happen and should happen. But I think your organization will be in a better position for that experimentation if you have those foundational layers in place. And finally, one size certainly does not fit all. This reference model is to challenge you and get you to think about what should be in your stack. But there aren't two companies out there that have the exact same stack, the exact same vendors in it, and that's where the hard work is. And I wish you all the best of luck in figuring out what should be in your state-of-the-art stack.
Thanks so much, Jared, for that presentation. Certainly, there is no holy grail to this, no easy way out, but thanks for giving us a lot of pointers on how to figure it out for our own company, for our own brand. We have one question that is coming up. The question is there a way to decide what works in which country, or are solutions universal?
No, it's a great question, and I think in a perfect world, sure, it would be an equal playing field, but it's just not the reality. Geography is still important. Now, I think we've made a lot of progress over the years. I think we're getting to a point where it maybe is less important than we might have been 10, 15, 20 years ago. But in many cases, geography is still important. And maybe this is going to sound strange coming from the technology analyst. To me, it's not necessarily about how the technology is constructed, because I think, that is not geography specific. But I think where the differences really rise up is in terms of, do you have the skill sets locally to do an implementation correctly, to get the support you need to, once you're up and running, to make sure you're using the technology correctly. I think those softer skills that surround the technology are really where it can break down from a geographic perspective, and we've seen that with some of our clients who, they felt some pain going with a vendor that didn't have resources in their area and didn't understand their market, and that's where we usually see that kind of pain.
Right. There is one question from my side, Jared. You said that in an omni-channel strategy, we want to look the same. We want to speak in one voice to our customer. Is that really very important, or is it more important to offer the solution to the customer, even if it's not available on all different platforms, but taking to that one platform that will give him the solution, if that is where you're starting first, instead of planning to have the solutions on every possible platform? Should we then take them to the one platform where they will get what they need?
Yeah, it's interesting. And there's no right answer there. I mean, in some cases, you might be right. In some cases, it might make more sense to direct people to a single source. But in other cases, that's just not an option. You have to give someone that mobile experience, right? You can't wait for them to go back and get back home and check it out on their laptop or something like that. But I think the critical piece here is, and going back to Apoorv's examples earlier today, what we can't have is a disconnect in experience, that jarring disconnect. You can't have just the wrong price showing up, or one price showing up in one experience and one in another. You'll just lose trust completely of your customer, right? And that's where people go somewhere else, right? If I don't trust you, I'm going to leave. And I think that's where, to me, it's unacceptable. You've got to you got to be on brand, on message, and quite frankly, you got to be accurate in your data. So if you can't do that, don't create an experience there. Figure it out a different way, but you have to get those things right.
All right. Jared, thank you so much for joining us on this webinar of knowledge on how we can pick and choose on what is going to work for our Martech stack. Thank you so much for joining us.
Thank you, Anisha. I appreciate it. Thanks for having me.
I would also like to thank everybody joining us on this webinar. If you've taken away something really interesting, something that's going to stay with you long after this webinar is done, do tweet or do share your thoughts on social media. Use the hashtag Martech India and the hashtag E4M webinar, and share your thoughts with everyone. We hope that the insights shared by our experts today will put you in a position to reinvent your marketing strategy to include Martech and to leverage it to get you the answers that you want, the traffic that you want, the revenues that you want, the results that you want. A big thank you to the Exchange for Media team that has worked tirelessly to make this possible. Thank you for giving a platform for everybody to join in and share their knowledge. Thank you so much.